You know, for any nation, taking control of its own financial destiny is absolutely critical. It's the bedrock of real success. But for the Philippines, achieving this kind of economic sovereignty, well, it's more than just a goal. It's an urgent necessity. Today, we're going to look at how the Philippines is poised to transform a massive economic challenge into a story of national prosperity. Just look at this number for a second. $104 billion. That's the sheer volume of money that flows through the Philippine economy every single year. It's a staggering figure, really, powered by its global workforce, a vibrant tourism industry, and growing international trade. But here's the catch. Even with this torrent of capital, so much of its actual value gets lost along the way. The current financial system, it just wasn't built to benefit the Philippines first. Instead, it's causing a major leak of potential wealth. So the real question is, how can the nation reclaim that lost value and put it to work for its own people? All right, so let's dig into what's really going on here. The problem isn't a lack of money, not at all. It's the system that's supposed to be moving that money. The issue is baked right into the foundations of how international finance currently operates for the Philippines, and it creates what we call the paradox of liquidity. It really boils down to three core problems. First, you've got economic leakage. Just picture a leaky pipe. Billions of dollars are literally seeping out through high fees charged by foreign companies. Second, there's friction. I mean, when tourists get hit with currency conversion fees of 5, 6, even 7%, that's basically a tax on every single thing they buy. And finally, there's a lack of visibility. The current maze of third-party channels makes it incredibly difficult for regulators to track the flow of money, and that's a huge security risk. And when you look at the sheer scale of this market, it's just massive. Out of that $104 billion, about $70 billion, that's the lion's share, is money coming into the country. Think remittances from overseas workers and tourism dollars. The other $34 billion or so is flowing out for things like imports and travel. Every single dollar in both directions is impacted by the problems we just talked about. So, with a problem this huge, what's the answer? Well, what if the Philippines could build an entirely new financial foundation? A direct, modern link to the global economy that it controls. That is the incredible idea behind what's being called the Sovereign Digital Bridge. So what exactly is this Digital Local Currency Program, or DLC? Look, this isn't just another payment app. Think of it more like a secure, government-approved superhighway for money. It's what's called an API bridge, and it connects foreign banks directly to the Philippines' own domestic payment systems. You know, the financial railroads like InstaPay, PESONet, and QRP. And the best part? It's all done under the watchful eye of the central bank. And I really want to stress this point. This is so much bigger than a simple tech update. This is like building a new national highway system, but for the digital economy. It's a strategic national asset, one that puts the Philippines firmly in the driver's seat of its own financial future. Now, how this whole program works is actually beautifully simple. It's built on three core pillars that work together to create a complete, self-reinforcing economic cycle for the nation. Buy, keep, and spend. Let's take a look at each one. So here's how it all fits together. First, the buy pillar gives people direct access to Philippine pesos. Then, the keep pillar allows them to hold that money securely within the Philippine banking system itself. And finally, the spend pillar empowers them to use that money seamlessly, which directly fuels local businesses and the entire economy. It's a perfect loop. This slide really just nails the difference, doesn't it? The old way, it's all about predatory money changers, sky-high transfer fees, and a reliance on cash. With the DLC way, the buy pillar, a tourist or an overseas worker can buy pesos right inside their own home banking app at fair, transparent rates. It means more of their hard-earned money actually makes it into the Filipino economy. Now for the second pillar, keep. This is a real game changer. When foreigners can hold pesos in a digital wallet, it creates a massive pool of foreign-source deposits sitting right inside Philippine banks. This is what financiers call a deposit float. And what does that do? It strengthens the local banking sector, it boosts the nation's foreign reserves, and it helps establish the peso as a stable, reliable currency in the entire region. And that brings us to the third pillar, spend. This is where you see the impacts on the ground, in everyday life. Just imagine a tourist in Palawan paying for a boat tour, or buying a souvenir from a small family-run shop in Vigan, all by just scanning a QR code with their phone. This system plugs every local merchant, no matter how small, directly into the global tourism economy. It's about empowering millions. So, what does all of this add up to? What's the bottom line? We're talking about unlocking a whole new era of national prosperity and economic independence for the Philippines. And the impacts, they're not just theoretical, they are tangible and far-reaching. This new era of financial sovereignty brings four huge benefits. First, it offers regulators a crystal clear, real-time view of transactions, which makes the entire system safer. Second, it's going to hyperscale the adoption of the national QRFIS standard. Third, and this one is so important, it dramatically cuts the cost of remittances, leaving more money in the pockets of OFW families for essentials. And finally, it signals to the world that the Philippines is wide open and easy to invest in. And here's the thing, the Philippines is absolutely ready for this leap. The proof is right here in the numbers. Look at the national payment system, PhilPass. Back in the early 2000s, the average daily transaction value was around 350 billion pesos. By the late 2010s, it had skyrocketed to over 1.3 trillion. That exponential growth proves the country has the technical muscle to handle this kind of massive digital transformation. The foundation is already built.
So, in the end, by forging this sovereign digital bridge, the Philippines is making a powerful statement. It's no longer about just trying to keep up or participate in the global digital economy. It's about building the sovereign backend to lead it. This isn't just about solving a paradox. It's about seizing the future.